Hi, it's Katie Mackenzie, a mortgage professional with TMG, the Mortgage Group, and your host of I Love Vancouver Real Estate. I'm here today with Karen Carter, or Agent Carter, as she's more affectionately known. Karen's a realtor with RE/MAX and has been helping clients for over 11 years, I believe, buying and selling real estate. So welcome.
Thank you.
We're here today high on caffeine. We have had multiple cups of coffee, so if we sound a little excited, we've just been having an excellent conversation about real estate, the market, all the changes, and I basically threw out my outline of what we were going to talk about, and we're going to bring you something else today. So, Karen, welcome.
Are you ready for this?
I think so.
Excellent.
Is there anything that you think our listeners should know before we start about you, what you do, how you do?
I'm a residential realtor in Greater Vancouver, have been, as you said, for just over 11 years with RE/MAX Crest West Side. But other than that, I really want to focus on the changes in the regulations that have just been announced, I guess it's about 4 weeks ago now, roughly.
Yeah, October 17th when we woke to Twitter, Instagram, Facebook, all over the media and all over the news with the changes in the mortgage industry.
And there's been so many changes this past year and so much media exposure with misinformation. It'd be nice to actually talk about what the real implications of these changes are for people.
That's something we've talked about as well, is that there is so much misinformation, and I know I stood screaming at the TV on the 6 o'clock news saying, what are you reporting on something that's non-consequential for? There is so much more that's happening that is affecting, all of us, including ourselves, if we're buying and selling, that we should be providing the information that people need. And that's why I do this podcast as well, as we were talking about, is to get unbiased, independent, objective advice out to people. Yeah.
I think since the announcement came out last month, I've had more conversations with people saying, well, isn't everything going to change? Mm-hmm. Hasn't everything changed already? Mm-hmm. The answer is not really. Mm-hmm. Some aspects for some people, yes. But back to, if you are planning a strategy to buy a property, if you're planning a strategy for your life, stick to your goals, stick to the focus. You might have to do some tweaks, but you will get there. Mm-hmm. Mm-hmm. So I would love to throw a scenario at you.
Yes.
Young couple I am working with, joint income of roughly $100,000. Mm-hmm. They were pre-approved back in early September, if my memory is correct. Mm-hmm. As soon as the announcement came out, they went into panic and said, wait, we're going to hold off and see what happens.
Sounds like every pre-approval I had.
Exactly. So from a realistic perspective, they had, they could do 10%, but just go budgeting on 5% down, and they've got, as I said, joint income of about $100,000. How is this going to impact them?
Well, without knowing their background or what other debt obligations they have, so let's ignore that and just go with the simple math. We are looking at, for that specific couple, a change in what's called the qualifying rate. Mm-hmm. So the government is now mandating that we qualify someone on what's called a benchmark rate. So you might be actually offered by the lender of choice, say a rate at 2.49, but you actually have to qualify at that benchmark rate. So for these clients, previously they would have been qualified for the amount that we had them at, and then overnight, if they didn't have a firm offer in place or a pre-approval from a lender in place, then they'd have to be qualified at a rate going from 2.49 to 4.64. Right. So effectively, to get the same approval as they had the day before, they needed a raise of, what did we do? We did some math here. They needed a raise of about, I've got the math, $28,000.
Right.
So basically, their approval has significantly dropped. But as you say, what they can qualify for has changed, but the strategies that you need to employ to become a homeowner or to upgrade, move into a bigger space, buy a rental, vacation property, those strategies are the same. Mm-hmm. So, I think people have knee-jerk reaction and panicked, and everyone's saying, let's see what happens. My messaging has been, why? Let's revisit. What are you approved for? Let's revisit that with your realtor for your price point. Or is there other debt that you can pay down? New Year's coming. Have you asked for a raise in a while?
Yep.
Right? Go back and ask. Can you employ yourself with a secondary job? Do that other love that you do, me with my photography in the background.
Yeah.
Is there some other way that you can draw additional income? There are those core strategies that we say to people to make sure you stay on track. Don't just back out because of the fear of what's just happened or fear of future. What could happen if you put in an offer today and have something else change in the coming months?
Right. Now, with that in mind, especially this time of year, because we're coming into the holiday seasons, and I have this conversation with my clients all the time that yes, the market has changed a bit, and yes, your requirements are different now than they were a month or two ago, but whatever you do, don't go crazy at Christmas.
Yeah.
Don't get a new car loan. Don't apply for a business loan, because if you still are serious about buying in the spring, if you adjust anything right now, that's going to have a bigger impact than you realize.
Yeah.
Can you speak to how these things influence what they can get?
Yeah. Qualifying for a mortgage is basically income in, debt payment calculations out, so whatever you have on your credit bureau already, or anything you do between the day you get an approval and the day the mortgage funds also gets included. So you're going to walk into the bay, Christmas trees are up, music's blaring, and you see the dream mattress and you think, I haven't slept in months, hallelujah. I'm going to buy that thing and it's going to be free, 0% interest for 6 months. Worst possible thing you can do.
Right.
You're going to get the mattress free. You should still buy it for yourself, but do not activate any new credit, even if there is no interest on it. It can kill an existing approval. The day before a mortgage funds, the lender can pull a new credit bureau, and if there's new debt on there, it can kill your approval. And now you're in breach of contract because you can't close on the mortgage.
Which is a threat to your deposit.
Very big threat.
Yeah.
So that can impact you. People get excited. They go out, buy new furniture for their new place, or I got qualified for the mortgage. I'm going to go buy that fancy new car I've been wanting. There's a lot of behaviors that you think instinctively people wouldn't do, but they do, including quitting jobs. It's a new year. I hate my job. My New Year's resolution is to start a new job. These things can occur, but I think it's important that you know the impact of them by speaking to your mortgage broker or lender and saying, how would this impact before you actually go and do it?
Right.
Yeah, because any new credit will show on your credit bureau very quickly, and it's not something you can hide. People try and hide it, and I have had some people where they've done this, and luckily we've had enough income to still make the file work. But I just say, speak to your mortgage broker before you do any of these things.
So once you've actually got an accepted offer, your mortgage has been pre-approved, you've accepted the offer, you've removed subjects, you can go and celebrate, have a nice dinner, but don't go and spend $10,000 on a vacation.
Yes.
That is then going to show up on your credit cards in 2.5 months when you're actually closing.
Correct. What people don't also know is that closing credit is a bad thing in a strange way, a reverse way. The way the credit bureau is designed is it looks at how long you've had credit, so length of term, and if anything's new, if anything's on high limit or close to limit or over limit or late. So if you're closing that old credit card you've had forever thinking this is a smart move, it's actually going to shorten the period of time to which you have had credit, thus decreasing your credit rating. So that can also hinder you.
So what I'm hearing, hypothetically, if I have 3 credit cards, I've had one for 20 years, one for 10 years, and one for 5 years. If I want to improve my optics of my debt, if they're all, say, substantially below halfway, like a couple thousand on each, say, my best option would be to close out the newest one, not the oldest one.
Yes.
How about if the interest rates are higher on the older one?
Well, this is where the banks will nab you because they do offer, intro rates for 6 months, and then you can balance transfer after and close that credit card. Well, every time you open a new credit card, a new line of credit, they show on your credit bureau.
Right.
And activity like that, opening, closing, transferring of balances can also hinder your credit rating. So again, it's that conversation of how will this impact me?
Right.
So to get that advice from the broker first.
So in an ideal world, if I want to buy a property in April, this coming April of 2017, how far back do they actually look at my credit bureau?
Items on your credit bureau can stay for up to 8 years. So I'll pull a credit bureau for a client and, they've moved from one relationship into another relationship and the mortgage or an old line of credit shows up and they panic thinking, why is that still there? And it's just because it is a part of your credit history, and that's what a credit bureau does. It shows all the history. So even debts that have been paid in full, as expected, will show on there. They'll just show at the zero balance, but they show to the lenders that credit history. It's one of the most pivotal pieces, other than income, of course, and the requested mortgage amount. And it is one of the most pivotal pieces, and it can absolutely push you from working with what we call an A lender at best rates to a B lender at still very good historically low rates, but higher as a result, or all the way over to a private lender where they're basically prescribing rates because they can. So again, back to, these changes that did occur on the 17th of October and are in place firm as of November the 30th, there are ways and strategies not to work around them, but to ensure that you're still meeting your goal of getting into a home at a certain price point.
Right. So what would be the number one piece of advice you'd give to anyone who did have a pre-approval and is sitting on the fence right now?
Speak to the person who gave you the pre-approval. Go back and say, what am I approved for today? Is this lender still available to me today? Is there a better lender as a result of these changes? If you're working with one of the big 5 banks, they typically like files that are in the box and fit the box. And, I did work for one of them for 15 years. Right. But you may have fit the box with one and now something's changed, or because of income levels, you don't fit that box anymore. And what I find is that those people aren't necessarily being referred to a mortgage broker that has access to the other lenders. They're just not getting the right advice. So speak to whomever you've had this approval with. Do not abandon your plan of home ownership. I say it's like learning to run a marathon or a half marathon or Tough Mudder. You can't start by running the marathon. You have to start by all the little steps, the Walk Run app on your iPhone. So start with, your income. How do I earn more? How do I get better job stability? Am I doing what I love to do? Because if I change jobs, that will affect my application. How do I pay down my debt faster? Go back to your realtor as well and say, what's changing in the market? You're the expert in the market piece. So where has the market shifted? If I can no longer afford something, and I have a client right now, approval went from 900 to 775. So if I can no longer afford in downtown Vancouver, where else do I need to be looking? Because then you're the expert in those communities and you can say, well, here's the grocery store, here's the elementary school. It's actually not that much farther drive to work for you than the other community. It's just you haven't been introduced to that community before.
Right.
I've lived Commercial Drive, Kerrisdale, UBC, Kitsilano, downtown, and all the areas have all different and unique things that are available. And I think it's just a matter of learning what they are. So again, another piece of advice is just that, is to look at other communities that you haven't looked at. Like, have you looked at Richmond? Have you looked on the North Shore? Everybody is so stuck with the term Vancouver proper. What are you missing? I have a friend right now, as we were talking about, she's got a beautiful condo. They've redone themselves, put blood, sweat, and tears into, and they haven't had a bite on it yet. And I'm thinking, this is a perfect condo for even, you could put a family in there, and it's at a great price point. And I'm thinking, why aren't people looking at this? Why haven't they seen it? And it might be because it's not in Vancouver proper.
And it's interesting, that comment, because I just literally 2 days ago took a listing in Coquitlam of a 5-bedroom, 3.5 bathroom, 3,600 square foot house for $1,025,000 in Coquitlam.
Yeah.
Versus if that was on the west side anywhere, that would easily be 2.5.
Oh, absolutely.
Or more.
Yep.
Even on a small lot.
Yep.
So yeah, I agree with you. It depends on what you're looking for in your home, what specific things you want in your lifestyle.
I think there'll be more gems like that coming because people are generally hesitant right now to make a move because of all the changes, or enter into a contract and say, well, what's going to happen between now and when my mortgage closes? Is something else going to change? You know, it's like you're scared of getting your hand slapped again. So I keep saying to people, just keep on the strategies, keep looking, because again, everyone says, oh, well, this is the worst time of year to buy a home.
Wrong.
Wrong. A lot of people buy it this time of year because it is darker, it is gloomier, there's less people looking.
Yep.
So you've got a better advantage.
And I have this argument with people all the time. They say, well, winter's a horrible time of year to buy. It's a horrible time of year if you're living in Winnipeg and under 3 feet of snow. If you're out in, Moncton and under snow, or anywhere that's got ice and chill and cold, yes, the winter impacts the market. Vancouver does not have that same effect. We might get a week of snow if we're lucky. And yes, everything stops for the week and nobody does anything. Doesn't even go to, nobody even goes to the grocery store for the week. But other than that, we don't have those seasonal influxes the same way a lot of places do.
Absolutely. I remember my first condo I bought in Kits, gray, rainy. It was in November. I think it was actually November 23rd. So we're recording today on the 24th. So years ago. And then I remember the first sunny day and I was like, we have a mountain view. Amazing. And it was a funny experience to have. But yeah, I say to people, winter's a great time. Right? You can arrange it so that you don't have to move during winter months. Like there's a number of strategies there that we won't go into. We digress. But yeah, stay and stick to the strategy that you had. You can feel hesitant, but as long as you've got the right team around you and you're getting the advice you're looking for, you'll be fine. Right?
And for the listeners out there, the one piece of advice I can give is sit down with Katie and talk it all through. Do the plan in advance. Don't wait till you decide I want to be moved in 3 months and then start. Because the optics of your finances are going to make a huge difference on what you can get, how easy it's going to be, and how stressful the process is going to be for you. So please talk to Katie.
Thank you.
You're welcome.
We could talk for hours, but we will end. For now, if anyone does have any questions with regards to the changes, happy to answer them. I've been answering them for weeks now, and we've got good tools. We were using one earlier for your iPhone or mobile device where you can sit and calculate for yourself at home the payment amounts, and they have all been updated with these changes. As we stated, everything is effective November the 30th. So by the time you hear the podcast, it will be in place, and reach out. So please just reach out and ensure that you're working with the right professional team. You'll be in your home in no time. So thank you again for listening. It's Katie Mackenzie, your host of I Love Vancouver Real Estate and mortgage broker with TMG The Mortgage Group.